Well, I got lots. It's an easy target. I feel like
Easy, I
I'm punching down, but
know. All right, we're live. We'll give it a minute. Sometimes take some people
sure.
a bit of time to get ramped up a little. We're going to be on YouTube and Twitter, X. All right. So, welcome to another episode of Let's Talk Markets. Let's Talk Markets Live. You think I'd have that down after all this time? We are extremely excited to have today's guest with us, David Ducinni. Is that us here? Ducinni. The founder and CEO of Silicon Prairie Holdings. So, SEC FINRA reporting broker dealer, registered alternative trading system, an ATS or a dark pool. And that so you have mechanisms like crowdfunding, customized funding portals, M&A that is taking place through this ATS and FINRA broker dealer, and I think that should lead to really interesting conversation. And I know that you've thought quite a bit about FINRA and self-regulation as well, and have some thoughts on that I think we can have a lot of fun with. So welcome, and thanks for joining us.
Appreciate that, Dave. Really appreciate the opportunity to connect with you and to share my mostly unvarnished and probably not safe for work thoughts with your listeners. And hey to my friends at FINRA who are tuning in. Lots of love from the Silicon Prairie.
Someone's getting an exam tomorrow.
Yeah. Someone's going to get an early retirement package if they keep hassling us.
So, David, why don't we start, take a step back and, what is Silicon Prairie?
Yeah, for sure.
Where did it come from? What was the inspiration? What problem were you trying to solve?
Yeah, I love it. That's a great question. What problem are you trying to solve is literally one of the first questions we ask people on a daily basis. We'll get into that, but I'll tell you kind of the origin story here. So, I ran an ISP from 1994 until 2008. I've been writing software since 1980, and so I actually tried raising capital back in the early 2000s timeframe. And for a voice over IP play that we were trying to get into, like a competitive local exchange carrier space. So I'm very well familiar with dealing with regulators in this. It's not my first rodeo, as they say. And I actually stumbled across I bought a 6-pack of local beer. So this is way back before the craft beer thing sort of started off. And so there was a little brewery called James Page Brewing. They're not around anymore. You can read about their ignoble demise. But basically inside the 6-pack, there was a little piece of paper. It said, if you like our beer, become an odor. I was like, mind blown, right? You can publicly solicit for investment. And this is like 2001 timeframe, right? And so I did some digging. And I found that there is this, there still is actually an exemption called the Small Corporate Offering Registration, SCOR. It's not the SBA, Society of Corps of Retired Executives. So anyway, the SCOR offering is literally the grandfather of modern crowdfunding. In fact, it still exists on the books. You can go find it on the NASA website. In fact, a lot of lawyers kind of forget that it's there. So I became aware of essentially public solicitation, if you will, in the early 2000s. In fact, I actually have an email exchange between me and the lawyer who helped kind of get the law sort of tuned up here in Minnesota. I actually wrote back, this is like in 2005, I said, hey, would it be possible to set up like a private bulletin board, like exchange system so people could trade their securities? And I realized then that, again, this isn't my phrase now. This is my affable partner, Cedric Long. But, he opined that said, look, an investment without an exit is just a donation at the end of the day. And so we've been after liquidity since day one. So, okay, fast forward, the Jobs Act of 2012. And I'm like, okay. And in the meantime, I got involved in kind of blockchain, Bitcoin, crypto stuff in 2010. And I realized like the blockchain could solve the cap table problem, right? And also governance, right? Decentralized governance. And so anyway, so we started building the stack, got involved with a local group here, helped do a state-based crowdfunding exemption that got approved in 2016. That's when we hung our shingle and started as a state-based crowdfunding portal. 2018, we registered as a federal funding portal. So that's like a mini version of the broker-dealer kind of registration. We have a transfer agent affiliate. A lot of people don't know what the transfer agents are. They like the ones who keep track of the records. They're still important for separation of duties. And then, as you mentioned, a broker-dealer, that's where we're all in on. Silicon Prairie Capital Partners, formed in 2020. So what we basically do is we help people raise money publicly or privately. So people think, well, okay, crowdfunding. Well, that's actually just public solicitation. There's actually 4 flavors of that in the U.S. Regulation crowdfunding, raise up to $5 million. Regulation D, 506C, unlimited amounts of money from accredited-only investors,
Yep.
or, of course, Regulation A, the mini IPO, and, of course, the classic IPO, the S1 registration. So if you're willing to publicly solicit, you have a wide variety of options to do so legally.
Yep. And this is, it hits home for us, especially at Irvin, where we did all of our initial funding through Reg CF. And we used a crowdfunding portal. We were not even aware of you, unfortunately, at the time. But we had a great experience with this. We were inspired in seeing the sort of movement of the individual investor who wanted to own a company. They were the biggest fans of that company. They were their best customers,
right.
And it was really a beautiful thing. And we said, let's do, because it was at the time we probably could have done a Kickstarter and given T-shirts or something, but no one would have owned equity in the company.
Yeah, there would be brand
champions, right.
Yeah.
Right, exactly. And so, we've got over 2,000 individual investors in our small startup, and it's been the foundation of our entire company.
Yeah, what you've hit on is the brand champion story. And so what we always ask our clients is think through who does well when you do well, right? So it's not all purely about the investment. Like if you try to activate somebody on a financial motivation, there's only 3 things you can pull on, right? They're seeking gains, they're avoiding losses, or they have the need to diversify, right? With regulation crowdfunding and public solicitation, there's like 20 other reasons somebody might want to invest. Like they just want to see this thing exist in the world, or, hey, guess what? Dave, you walked my dog last summer. I want to clear some social debt. Here's $100, right?
So then let's talk about that, because I think that a sort of a major premise, what you said sort of as you were giving your intro, this idea of decentralized governance, I think that decentralization is kind of like a fundamental part of everything you're trying to do, which is, we'll get to the FINRA side of that later, but how you mentioned you use blockchain for cap table management. How do you see blockchain technology integrating with what you're doing?
Yeah, for sure. So I see it on the sort of after the raise side of things. So we're all US dollars. We're all legacy steam powered COBOL era, financial rails, like literally on a daily basis. We push files off to, the big monster in the sky so I can churn through these COBOL records. So today we've designed the system to be non-custodial. So we literally have the design to do a non-custodial trading platform, but instead of using miners, right, we actually use humans and digital signatures, and we can talk about that. But fundamentally, we think that the way that this technology is going to roll out is private permission blockchains, right, where each company, each issuer has their own blockchain, and each one of their participants, in potentially regulators, can plug in and get copies of the transactions, right? So you have oversight, but we think that it's going to be powered by essentially digital signatures. So again, if you have essentially a company and a cap table and you've got an investor and they're not a control person, we can dive down as far as this rabbit hole you want to go. But let's just say one of your crowdfunding investors, it's been a year, they want to sell their shares. You can say, okay, well, we have a right of first refusal to buy our stock back, but we're not going to invoke that. So you're free to go sell your stock to somebody else. And by the way, you're not a control person, you're not a director, officer, et cetera, et cetera. So we're going to go ahead and sign off on that transaction for you. And when you find a buyer, you can sign off on that transaction and sell your shares, right? That's all it would take. It doesn't require mining. It doesn't require proof of work or proof of waste or proof of stake. It just literally requires digital signatures to affect the transaction. Now, let's say you're an insider, right? Control person, whatever, beneficial owner of significant value. And you want to say, okay, well, I want to sell my shares. And the transfer agent says, okay, well, Dave, you're allowed to sell up to $50,000 this quarter. You're like, fine, whatever. So you, the company, and your outside lawyer, or you, the company, and the transfer agent would have to sign off on. So you need like 3 of 5 signatures, as it were, to affect the transaction. And so we think this is how you could actually facilitate a completely non-custodial trading platform far away from any kind of centralized control.
And so, okay, I often find myself, I hear blockchain and I'm like, okay, so why not a traditional database? And so in this context, you think sort of the centralization and the authorization layers of database are not up to the task of what you can do here with blockchain?
Oh, I think that they actually are in a lot of ways. They certainly are. Blockchains are like the world's slowest database. And so you actually need classic database indexing technology to make them useful. Like the blockchain in of itself is just like this never-ending series of log entries.
Right.
And you got to start at kind of at the end and work your way, or at the beginning, or at the end and work all your way backwards, so you know what's actually true or not. So you absolutely still need a classic database.
Okay.
We just think that you don't need essentially centralized control of that database, right? So it would be the case that it would absolutely, you fire up your client, you're listening for transactions, you're recording them in your own local copy of the ledger, right? We can still achieve consensus, right? As they plug in and say, okay, we want to get, all the blocks that have been signed off on. And so that's just on the pure transactional side of things. Now, if you start to layer in governance, that's when it gets really interesting.
Okay.
Right? This is where I think when we start talking about, putting the self back into self-regulatory organization, this is where I think the real power can come in, right? In terms of decentralizing essentially the voting, if you will.
Okay. Perfect transition. So let's take that. Let's take a step back.
Okay.
Let's talk about self-regulation.
Yeah.
When we're broadcasting, we often have a very sort of split audience. Some people they're really learning about some of the stuff for the first time. Others are in the industry and this is, their bread and butter. So let's think about, for those that, for whom self-regulation, maybe they know what it is and they know who FINRA is, but they really struggle to understand why does this even exist?
FINRA knows what it is, or if FINRA knows what FINRA is, quite honestly.
Yeah. So let's talk about that. Where did FINRA come from? Why does it exist? And
yes,
why
exactly.
why do we have self-regulation on Wall Street?
Yeah. Okay. So this is all pre-internet, right? So I was just started listening to William Gibson's Neuromancer. I've been getting the audiobooks again. Super classic. The prologue is hilarious because, of course, he wrote this. It was released in 1984.
Yeah.
He said, "Look, I might be a science fiction writer, but I'm not a futurist." Because again, the first thing you notice about the Neuromancer world is there are no cell phones. There's still like pay phones all over the place, right? So that's like one of those things he sort of apologizes for. Okay. So
I've been meaning to reread some of those
books.
Oh,
it's good stuff. I like. Yeah. A huge fan of, this is like no endorsement, but Libby.app is like the thing you use to access your own local library for free. Just go on there and then, sign up and then get in the queue. I've been listening to 48 Laws of Power on and off, which is really awesome. Okay, so here we go.
Okay.
Set the Wayback Machine, right? Back to the stock market crash of 1929, which, by the way, was not like buy, sell, buy, sell, buy, sell. It wasn't people like, it was literally the banks, like the Main Street banks were actually betting with their depositors' money, right? That's what actually caused the crash. It wasn't, because all these dumb, non-sophisticated investors were on like eBay and, Robinhood or whatever. So, okay, stock market crash of 29, Securities Act of, or the Paper Act of 33, and then the Exchange Act of 34. Put a carve-out that says, okay, the SEC can hire essentially self-regulatory organizations to help essentially act essentially as the people who are in the industry who know the business themselves should be the ones who be able to determine if the behavior of their members is proper or not. Okay, so
and part of this, if you think of the state of communication technology at the time, right? It was pretty important, right? You had an agency in Washington, but that wasn't where physically things were happening.
Mabel,
right?
Get me the president.
Exactly.
Right. So so the state of communication network was pretty dismal. So the NSAD, National Association of Security Dealers, was essentially formed. That last time was actually there was any self-regulatory, and then literally like 17 years ago, NYSE and NASD got smashed together to form FINRA. And so FINRA's only been around for 17 years, even though lately their claim and all their advertising, they've been protecting investors for 85 years. That's totally that's a fraudulent claim on their part, and they should be punished for that. Because again, the reality is this, like nobody hired them to do that. You didn't hire FINRA. I didn't hire FINRA. My bank didn't hire FINRA. Right. And so every time I have conversations, I have to keep reframing the conversation with them. It's like, look, guys, there's only one party of this whole transaction that you get to have any say in, and that's my broker dealer, or that's my funding portal. Like the buyer didn't hire you, the seller didn't hire you, the bank didn't hire you, the transfer didn't hire you. Like you're not a party to this transaction, right? And by the way, what do you think your role is telling a consenting adult what they can do with their money? Like my partner Jade uses this great example all the time. She's like, look, evidently, I am smart enough to go to this fancy bake shop in town. We have this place that's called the Buttercream Collection. They make these awesome wedding cakes. They're like tens of thousands of dollars. She's like, look, I can go to this bake shop and I can plunk down $5,000, buy a wedding cake and ask for a single fork and sit on the curb and eat that thing, and no one's going to stop me, right? But if I dare to invest a $5,000 into that business so they can open a second location, well, then suddenly FINRA, the SEC, the state regulators, they're going to tell me I'm too stupid to know what to do with my money, right? And that's just un-American, quite honestly. So in a nutshell, we volunteer. So there's literally, so the law says the broker-dealer has to belong to an SRO, right? It doesn't say we have to belong to FINRA. They were not they weren't brought into existence by Congress, which they like to claim too, which is also not true. And they're not the government. Sometimes I like to say that, but that's also not true.
Yes.
They are.
I do often describe them as quasi-governmental, but that's quasi, totally fair.
Yeah.
Like they're not
Well,
actually an arm of the
NGOs,
government.
right? Yeah, NGOs, non-governmental organizations. That'd be about the closest thing you get. Okay, so here's what they are fundamentally. Okay, one, they are a not-for-profit organization. Okay, right? That supposedly has voluntary membership. Like I volunteer to join their organization, right? Who's our
And do you have another option?
I don't. That's the funny thing. So
Oh,
here we
well,
go.
very voluntary of you.
Exactly. Right. So yes, I volunteered to join their organization, and they just simply do not have any kind of ability to equally enforce the rules at all. They're bloated. They claim they've got like 4,200 employees. I did a quick search on LinkedIn last week. There's about 6,000 people that claim they're working for them. Sometimes they're people that do essentially like adjudication. There's a bunch of contractors, and the reality is like the number of firms are shrinking. And now they just came out and said, "Oh, we need to raise our rates to continue our mission." I'm like, "No, bitch, you need to cut your staff, right? You don't need that many people. Like they could take a haircut right now." And here's the dark secret, and it's not even that dark. You can just Google it. Literally 80% of all of FINRA's revenue comes from. Do you know how many firms out of the 3,000 firms that still exist?
Let's guess 10.
Yeah, you're not far off. I think it's like 35. It's under 50. Fewer than 50 firms create 80% of all of their revenue. Like, why wouldn't they want an alternative option, right? Let them just go deal with the top 100 firms and go let all the little firms go form what I think should be a cooperative model, right? That's based on cooperative principles where members have to be on committees, right? And to offset their fees or whatever. And this is where the decentralization thing could kick in. Like, you don't need an army of, thousands of, has been or not run lawyers, right? People who can't get jobs in the real world or age out or fail out, right? I've got a lawyer now I'm dealing with there who's never worked in securities or business. She went to school for social justice. I'm like, you are the wrong person to be at FINRA.
So FINRA is here because the law states you need a National Securities Association in order to oversee broker dealers.
It's a dual role. So the SEC. So actually, up until I guess it was like maybe 20 years ago, I guess the SEC you could have broker dealer report right to the SEC, and then they did away with that when this unlicensed illegal monopoly came in, because that's what they are. Like if you have your choice and your choice is do you want it or not, that's not really choice.
Right. Okay. So the SEC, I didn't actually realize that at some point did have direct oversight of broker dealers.
Yeah.
Did away with it. FINRA comes in. I assume they did away with it when the NASD came in, and then eventually FINRA comes in to take over the NASD and whatever NYSE was doing for regulation.
Yeah, actually, as I understand it, you could still be a direct reporting broker dealer up until FINRA was formed. Like I go back and confirm that, but because NASD's been around since the 30s, as far as I understand it.
Okay, and so the purpose here is that broker dealers need oversight.
They for sure do. There's no question.
Yeah, no one's arguing that. Right?
No one's arguing that. Right.
Very often,
some might be arguing it. I am not arguing.
Yeah,
I think the role of oversight is critical, especially since you have all different types of broker dealers. Like that's where they really struggle. Is that there's you can have I can't lie. Last chat there's something like 100 different lines of business that broker dealers can potentially engage in. And so I think again I think a much I think there ought to be like dozens of SROs. Quite honestly, at this point. If we're going to have any SRO, which is, up to debate because Project 2025 calls for for FINRA to be abolished. And I just saw Reason magazine called, for the SEC to be abolished. So who knows what's going to happen? But honestly, there has to be choice. You have to have a choice. And, some of these rules are arbitrary and capricious. And I think, we as essentially the people that are actually doing the work, like my broker dealer focuses on online capital formation. That's all funding portal stuff. Like we should get together the 80 or 100 some odd broker dealers and funding portals and form our own SRO because we know this business better than they do.
Yeah. So I think to me, that sounds like that's the critical element here. So you have, let's agree that you need oversight of broker dealers because there are a lot of bad broker dealers. There are a lot of bad banks, right? That when you get into the world of finance, there is so much awfulness that you need some level of oversight to try to police it. So let's all start by agreeing
100%
on that, right? And I think most of the people listening would agree.
In the world, and they always travel together. Greed and ignorance always travel together.
Right. And so the question really becomes, how do you effectively oversee the world, this financial services industry. And so today the answer is simply FINRA. And FINRA, like you're saying, has this just incredibly broad remit. And they're trying to oversee all these different types of firms, different kinds of broker dealers, from Robinhood to Goldman Sachs to you guys.
Yeah.
Right.
Right.
And those are three completely different, practically different industries. All within
planets, quite honestly.
completely different planets, right? And so how do you effectively oversee them? So let's jump back real quick, because one of my criticisms of FINRA, really since I've been in this space, which I the first time that I really spoke publicly about these issues was in 2012, so 12 years ago now, and I talked about how FINRA is so fundamentally conflicted, right? There's just, at its heart, being funded by the firms you're overseeing is a real fundamental conflict of interest. And so
conflict of interest is when they fine you and keep the money. That's the conflict of interest, especially when the employees can get a piece of that take. That's the conflict of interest. So I guarantee you, like right now, I pay $1,200 a year. I'm in day like 600 of a routine exam of my funding portal because they can find nothing wrong. And I'm certain if we actually do bring an action, which we're considering for harassment and tortious interference, among other things, we will be, as part of our documentation request, is asking for all the employee time records. Like I'm 100% certain they've spent hundreds of thousands of dollars on an exam, right? This is the core problem with their approach. And I've seen it in their faces, their sweet, dumb faces. They think they can inspect quality into a product, right? That's a Deming thing. You cannot inspect quality into a product, right? It's already there or it isn't there.
Yeah.
Right. The horse is out of the barn. And to your point, like I think, like I've actually sent things off on my contemporaries. I'm like, okay, I don't think that's legal. I don't think that's legal. I've sent it off to FINRA like a bunch of times. I've sent it off to the SEC. Like people in my industry right now are doing things that are not legal, and I'm blowing the whistle, as it were, but they're not doing anything about it because they're not incentivized to.
Right. Well, so earlier you said 35 of their firms are responsible for 80%.
Correct.
Right.
Yep.
And how often are those firms being, are the subject of enforcement actions being brought by FINRA on complex topics?
Yeah, almost. I'd say it's a number that's probably vanishing, close to zero. I mean,
vanishingly.
Right. I mean, FINRA is camping on like a $2 billion war chest at the moment, right? Those are money. That's money that should have that mostly came from fines, by the way. Well, guess where they're parking it, and guess who never gets inspected, right? So there you go.
See, very few people know about that FINRA portfolio of securities, right? Yeah. This is not something that a lot of people talk about, right? But you're opening like this Pandora's box. FINRA's sitting on billions of dollars.
They should hold U.S. Treasuries, or as Project 2025 calls for, that money should be disgorged into a fund back to the U.S. Treasury or into a fund set up and managed by the government for the benefit of investors.
So, and that is in fact, how the SEC works. So the SEC works very differently, right? That when the SEC collects a fine, that goes right into the U.S. Treasury. It does not go into the SEC. It does not help them police more. It does not help them do anything different. And it's often
there's no bonuses paid out of it.
No bonuses. Yeah,
right. Exactly. Right.
It's often split into disgorgement to give harmed investors back some money, and the fine, which is supposed to be a deterrent, but isn't really much of one when it's just a cost of doing business. Yeah. But that at least goes into the U.S. Treasury.
Correct.
So that is not how FINRA works.
No, no, not even a little bit.
Okay, so it's funny you're drawing this distinction where you have this idea around Project 2025 that says abolish FINRA in the SEC. I think a lot of people that I interact with online, a lot of people listening to this right now, we've got quite a few. Our numbers are pretty high right now, and
that's awesome.
Yeah, because it's funny, but like self-regulation in FINRA is a hot topic, and a lot of them would say that FINRA has fundamentally failed at policing markets.
Oh, for sure.
Retail investors are often getting ripped off and defrauded, and they want more to be done. They want better enforcement. They don't want enforcement to be stripped away.
And I'm fine with that if it's actually constitutional, and that's the big challenge here is that FINRA and their enforcement, thanks to our friends at the Alpine case, have essentially, at the Fifth Circuit, it basically said that the FINRA enforcement, whatever, is unconstitutional. There's separation clauses. There's several key arguments there, because you can't essentially act as judge and jury. And so when Chevron fell, that said, okay, SEC, you can't have your own kangaroo court. what rubric do you think a private organization that's not the government can have its own, kangaroo court? Right. And so at least I know for a fact that since Chevron fell, some of my friends like, well, we've been offered due process. I'm like, you take due process, right? All day long. You take due process all day long. And so, one of the things, our good, friend Hester Pierce has suggested, and I found this, like, she wrote this paper like 10 years ago. She's like, already like the problems with FINRA, like, okay, there's no self-regulation there. She's like, it should either be dismantled or folded into the SEC, or she said there should be competitor SROs.
And so competitor SROs, I love that idea. My concern, and I get it. Look, the Constitution is what it is. The Fifth Circuit is, the Fifth Circuit interprets the Constitution in a certain way. Other circuits are very different. But if you don't have some level of like streamlined adjudication, then from an enforcement perspective, you are not going to be bringing a lot of cases. Because it's going to become much more expensive and onerous to bring any enforcement action. Does that concern you at all?
Well, because essentially it's a little bit, it's like the tail wagging the dog, right? By the time you need to hire a lawyer, right, some shit's happened, right? I mean, there should be absolutely a feedback mechanism, right, where you say, look, this doesn't pass the sniff test, and I can see this on my own crowdfunding platform. I've seen it on Kickstarter, GoFundMe, all of my contemporaries. The crowd is way smarter than the individuals. Like, I even tell my own issuers, like, look, if you're going to go live, don't do it too soon. Go get your friends and family to pile in at least 20% so you show some velocity, because there's nothing sadder than seeing a musician on the sidewalk with an open guitar case and no money in it. Like, if you ever sat at a bar, like whenever there's a shift change, you'll see the bartender will come over and throw some dollar bills into that cup, right, to salt the tip jar. And crowdfunding is the same way. So, but here's the, like, hands down, like, we're a gates open platform. If it's a lawful business, you can pass a background check. Right. And it's reasonable, right? The amount of money you want to raise and your use of funds, like, you should have a chance to do it. Like, it's not me to tell you can't do it, because I think the crowd is smart enough. Right. And I think that with the things like, especially in regulation crowdfunding, there's supposed to be an open message board. And I've actually seen it work. Like, people are like, look, this doesn't make sense. Or why are you paying yourself so much money when you don't have the revenue to support the thing? And so I think that by having a system that takes feedback faster, right, we can pivot faster and potentially fail faster, versus by the time you get to where essentially you require a lawyer and a complaint and having a government body come in and adjudicate the thing. Like, it's going to happen. I just think that there'd be a lot less of it if we collectively were able to keep each other honest.
Okay, so when you envision sort of a future world of oversight and enforcement, you see a lot more sort of grassroots involvement, a lot more peer oversight versus a sort of on high regulatory agency.
Yeah, I don't think it's either or. Like, I don't think it's grassroots. I think it's professionals. I think it's people that have the experience and knowledge, right? Subject matter experts. But again, if you think about the power of a decentralized network, if you think about the thing that makes Bitcoin the honey badger of money, right? As some people like to say, is not
nice mental image there.
Is not the ledger itself per se. It's the gossip protocol. The gossip protocol is the actual peer-to-peer transaction bus, right? Now with things like Lightning, it's even more awesome, because now actually I think I saw something where it says the Lightning network is now a bigger Tor network than Tor is, and it's more secure, because it's the gossip protocol. And so I think again, I'm not saying don't get rid of the regulators. I don't, and like, even in the case of essentially, let's say, okay, I'm doing transactions in a company. The ledger's permissioned. I have permission. I've essentially, named a pay on death, or I've got, somebody else. I got people watching that thing, like, and the regulators can watch it too, right? Did I pay the right fee for that transaction, right? They don't have to necessarily know it's me publicly, right? Based on public-private keys, right? But I can have identity related to that public key. I can show proof of ownership. And if I want to file a complaint, or if a regulator's watching and just say, okay, well, these transactions, it looks like churning, right? Or even if I just hired like an insurance company, like, again, you can de-risk a lot of the space by, offloading, like when it comes to like dealing with threats, right? You either have to, mitigate it, you have to, account for it, you have to, don't ignore it, or you transfer the risk, right? So you could transfer the risk to, let's say, okay, I'm going to have an insurance policy. And by the way, the insurance company gets to watch the transaction. Well, I think in a decentralized world, right, many stakeholders can be essentially eyeballs on, on the chain.
Okay, and I guess there's a lot that you could also, I mean, do you see like smart contracts being kind of a fundamental part of this? Is that one of the ways in which you can have visibility. Like, let's say there's a corporate action that's going to happen, right? Like, do you define that via a smart contract so all the parameters are well understood? And then it just happens, it executes, and of course, that's it. Code is law, right? At that point.
Sure. Yeah, unless you want to do a do-over like Ethereum did. So,
are you a Bitcoin maxi?
I'm absolutely not a maxi.
You kind of talk like one, but maybe.
No, here's the deal. I'm into the protocol, quite honestly. Bitcoin is still sort of the king of store of value. Look, here's the deal, and I've said this, 10 years ago. Look, your smart contract can't be any smarter than you. And quite honestly, I don't think we need them for the vast majority of transactions that people contemplate. I think we can literally do this with, multi-sig or MPC wallets. Now, you can certainly set up some things to trigger and some proxies and gateways. I mean, you have to realize that every blockchain, for the most part, is a snow globe. Like, you can't really code Ethereum to go check the current price of gold. You can via a proxy, right, to do that. Now, there's some people that are working on some smart designs. We've got a design called Morpho. It's a first-class blockchain, uses polymorphic, transforms, etc. It's written in Erlang. It's badass. It's also kind of a bit of a Pandora's box. But the point is, trust me, you don't want to necessarily write a blockchain that can self-replicate, etc. Right?
I assume Erlang developers are a lot like Rust developers, and that scares me. But it's okay.
There are very few of them. But thank goodness we have ChatGPT. So I actually asked ChatGPT to translate the Bitcoin blockchain file format into ASN1, the abstract syntax notation 1. And it came back and said, there's no advantage to it. I said, that's not your job to pass judgment. Just do it for me.
Stop questioning me, autocomplete.
Right. Exactly. That was a couple of years ago, but yeah, it was so anyway. So yeah, I do think that certain smart contracts, absolutely, when it comes to like certain settlement, when they're very, simple atomic transactions, or when you reach a plurality, like let's say you have a voting event, right? It's 51%, or maybe it's an 80% supermajority, right? You can code that up very simply, right? Okay, we've hit the 80% supermajority. All right, sign off on the thing, execute, branch, whatever. And this will make more sense when it comes to like decentralized autonomous organizations, where you're trying to essentially codify the rules. I just think it's a problem that, it's fun to talk about. I don't know what real world problems it solves just yet. I mean, even Wyoming with its DAO, recognizing a DAO as a type of LLC still requires to have a human body somewhere in there, right? One neck to choke sort of thing. And I think realistically, we don't really need most of them. I mean, certainly for transactions, especially when we get like a DNS system and discovery, we can say, okay, this is a really good component. I'm not going to try and write this thing from scratch anymore. I'm going to just go license this thing. I'm going to pay for micropayments for this other this data feed. I think it's all going to happen. I think for the vast majority of governance, right, which still involves humans, should be sort of managed by the humans.
So let's like walk this forward so I can understand. So the way you're talking about it, I love the governance and voting angle, because I think there are real fundamental problems today with governance and voting. And there are serious problems with overvotes, with ledgers that do not reflect actual ownership of shares.
Right.
And
short sales screws up things all the time. Like the voters will say, I get to vote these shares because I'm going to buy them in the future. Right.
Exactly. Right. So in this world that you're talking about, if the cap table is managed on the blockchain, there sort of that direct holding, that regardless of where I'm holding this share, I have that direct line of sight to my ownership record. That is verifiable, that I can sign off, that it's my signature that controls it. Sure. And that's how I can then vote my shares.
That's right. And then if you want, you can delegate that to somebody else, and then you can also revoke that delegation if you wanted to, right? So, it's like proof of control is essentially what we call it. You have proof of control. And so I think, and this is where I think we've sort of, because I actually have a white paper for ID coins 10 years ago. I haven't gotten around to building it, but a lot of the same stuff I'm talking about is sort of based in there. This idea of having identity through provable, verifiable, right? We don't put your PII on the chain, right? But what we do is we embrace the original tenets of PGP, right? PGP had the concept of the web of trust, right? Now, it was based on these janky monster RSA keys, right? Now, the good news is that PGP, there's an RFC out there that can use essentially ECC keys. That makes it practically useful again, right? But I think what we're missing essentially is an identity layer system. Because again, everyone talks about identity. That's super interesting. Yes, of course, you're the Dave Lauer that I know, right? And then, here's Bob Smith. Well, I don't know Bob Smith, but guess what? Dave Lauer knows Bob Smith because he signed off on Bob's key because you all had a key signing party, right? Reputation matters more. What reputation is the currency of the future? It's not identity. Like all these companies focused on obsessing about identity. It's not that your name is Bob Smith. It's just you're the Bob Smith that I know or is known by my network.
Mm-hmm. So let's say for a second that Project 2025 is successful, or the Alpine Securities case, the ramifications of that. What do you think are what does the near future look like for oversight from that perspective?
A kinder, gentler nation. No, I mean, here's the deal. Like, I mean, can FINRA be redeemed? Some of the individuals, yeah, sure. The concept of an SRO, absolutely. Again, I think they'd be way better off. They'd be way more profitable. One, if they immediately slashed half the employees, right, who are doing nothing, by the way. I get like on calls where there's 10 people in the background. Like, what do you do, right? And by the way, I've been a member since 2020. Like with 4,000 employees, I keep seeing the same cast of clowns on a regular basis. Like I keep running with the same 12 people, even in other firms that I'm working with. So immediately take a haircut, 20% right off the top. There'd be no difference whatsoever in terms of their. And then, okay, so what they need are one, model documents, right? Tell me if this is legal. You have an obligation under the Fair Disclosure Doctrine to tell me if what I'm doing is legal or not. So give me model documents, service level agreements. It cannot be the case. And this is the only organization I've ever been in, or been a member of anyway, where they say, okay, we have 6 months to review your application. And then guess what? At month 5 on day 30, I get an email that says, you need to ask us for an extension. And I'm like, why do I have to ask you for an extension? Right. That's been done like 4 months ago, right? I had that happen literally like 10 times over our alternative trading system. It took us 23 months. We had to get our legislative rep involved. We had to threaten to sue them in federal court. We got Hester Pierce's office involved. And finally, in the 11th hour, they finally got off the dime because I basically said, look, I'm going to stop asking for extensions. And what happens? Like, well, we'll stop working on it. I said, the fuck you will stop working on it. I've given you 7 extensions at this point. There's nothing more you need to know about my organization. And that's the other thing that I'm doing is like, we just like to reconfirm the thing you told us the last 5 times. Is that still the case? As if that's adding value. So anyway, model documents, service level agreements, right? And then maybe something like, and this is my comment writ large, like I think all civil service jobs should have term limits across them just universally. But especially in terms of the SRO. And I think with a decentralized system where you have a de minimis staff, right, in the background, you ingest all of the corpus of all the membership rules and all the case law, out of the code of the Federal Register or whatever, and you give it to the robot. You give it to a large language model to tell you, is this legal or is this not legal, right? You can get a question and answer back right away. Like I went to ChatGPT and I said, hey, just fun fact, the people at FINRA seem to think that a check is money. And it's like, no, according to the UCC Article 103 of our, it's not money. It's payment instructions. Okay, cool. So FINRA, just so you know, the UCC says that checks aren't funds. They're payment instructions. You turn into funds at the bank. Anyway, so we could have a de minimis staff, we could have an AI model, we could have decentralized management, and you could do like they do in Australia where voting is mandatory, right? You have 100% participation. I say, look, if you want to join our club, you have to vote. And if you don't vote, you get kicked out of our club. And so you can go back to FINRA if you want to, if they'll have you. So that's what I think the future, I think, so I'm happy to announce that we've assembled a team of what I call the gruntled. So the gruntled and I are putting together a bid to go and start the application process to form a challenger SRO, mainly for small broker dealers and funding portals and transfer agents. Like the transfer agents don't have an SRO right now, so we're going to put together a bid to put together a challenger SRO. There's a whole process with it. It's going to take about 2 years to do. And we've got, litigators on board who will take on the SEC if they stall us or, whatever. One way or the other, we have to have a choice in terms of SRO. And this SRO would be based on a cooperative model. It would be decentralized governance, all the things I've discussed, because all those things are possible.
So so my experience of co-ops, I think I've had sort of 2 experiences with co-ops. One was like a Brooklyn grocery store, and it worked pretty well. And then another was this online collective, and that didn't quite work so well. And a major reason why that didn't work well was the lack of involvement of the members. So can you describe, like, what does a co-op SRO, I mean, you've done it in pieces, so let's just bring it together. Like, what does a co-op SRO look like And how do you think it can be superior in policing its members if its members are the ones that need to be the ones that are active and engaged?
Absolutely. The short answer is this: rational, enlightened self-interest. so here's the deal. Like, if I knew that my actual annual fees were $10,000, I would pay that instead of pretending it's $1,200 and having to pay lawyers, $10,000 or whatever, right? So I think there's a couple options here. One is, right, you can have a tiered membership structure. So typically in a co-op, it's one member, one vote. The beautiful thing about co-ops is they can raise money legally. They're allowed to raise money. They can have essentially shareholders. You can pay them, interest or whatever, dividends, et cetera. They just don't have a say in the way the business operates. And so we can go bootstrap and actually fund a competitor SRO. Right? I'm not worried about funding the SRO. Like, I know a ton of people that and actually know how to raise capital publicly, right? Mm-hmm. So funding the SRO is not really even a challenge. Even finding qualified individuals do it. You've hit on the point, essentially the bystander effect, right? The idea that the more names you put into the subject line, the less responsibility any one person has. So I think it's a combination of things. I think one is that you could have a fee structure that says, look, I want to be a member, but I don't have any free time to participate. Okay, so I'm going to pay $20,000 a year, $10,000 a year, whatever, to be a member. Or I would like to be on the committee that writes the policies around password renewals or password policies or strong passwords or securities transfers or best practices or good delivery, or like the list goes on and on and on of all the things that we do, right? And so I think, and there's a ton of subject matter experts out there. So let's say a small firm says, well, I'm really passionate about regulation crowdfunding, so I would volunteer to be on the regulation crowdfunding committee. So any matter that goes in about voting, okay, well, funding portal XYZ is taking money in during test the waters. What do you think? Up, down? I was like, well, I don't do that. Do you do that? I don't do that. You do that. Oh, really? What rubric are you doing? It's like, okay, well, we've all collectively agreed and we voted that that's not considered, part of our rules. And so you either have to stop doing it, right? Yeah. Or go find an organization that will let you join them to let you do that thing. So I think there's a couple of ways. And I see there's a comment in here about asking about, open source. That's the whole point of having essentially decentralized distributed ledgers. It's essentially all visible if you're permission to have access to the thing. And so I think, as long as you have access to the chain and the data format's documented and you've got the ability to audit the code, right? Eric Schmidt, Cathedral in the Bazaar, 1980s, right? With 1,000 eyes, all bugs are shallow. And so I think that applies even to the transactions themselves.
Okay, so let me ask another question. Do you think that FINRA should enjoy immunity, and does the co-op that you've envisioned, is it also immune?
No, absolutely not. That's anti-American, right? Again, at the end of the day, these organizations are not faceless anonymous. There are individuals, right, who should be held accountable. Like, again, I don't think it should reflect badly on the rest of the organization. There should be no immunity whatsoever. If they can do the job, right, then, they should be able to enjoy it. But again, we're not talking about an organization. So like the organization in a self-regulatory organization needs to have a self, right? It has to have essentially some sort of core component of it that makes it, for lack of a better term, human. So I don't think the organization should have any immunity whatsoever. I don't think that's, the rule of law. They have an obligation to tell us what's legal and what's not legal, and if they fuck up, then they have to pay the prices for it. Now, again, talking about the ability to transfer risk, like what I would do immediately is like, okay, well, if you join my SRO, we will put in a prepaid legal benefit. Like if you join the SRO and you pay the fees for it, the SRO is going to stand in to help you deal with whatever, right? So I think there's lots of ways, in other parts of the world, that we can look to in terms of governance again, that can put the self back in SRO.
Okay, I mean, this has been super interesting. I know we have a lot of people listening who feel that they're in a particular situation where they've been wronged by FINRA. I don't know if you're familiar with this, but it's an OTC stock that was short sold and halted, and they have taken many actions. They still feel like they're just being held in limbo. Like, is there any without maybe knowing the situation very well, is there anything any advice that you can give people who feel like they've been wronged by FINRA?
Yeah.
Is there anything they can do today?
Yeah, well, so here's the deal. You can complain to the SBA. So the SBA has its own national ombudsman, the ONO, the Office of the National Ombudsman. Now, they won't necessarily take on FINRA because FINRA is not the government, which will then just help confirm they're not the government. But they will have to go to the SEC. And so you can start to amplify your voice through things like, I found like the California AG's office is super helpful. The AG in Texas is super helpful. Again, this SBA ONO, the Office of the National Ombudsman, is a good opportunity. the thing with FINRA is that they have a long history of basically dumping stuff and then declaring it illegal. They've done it themselves. And so I don't know how or where they got their hands into the kill switch for things when, again, they're not hired by the companies themselves. Like, I got a friend who's a transfer agent who, on corporate actions, you have to get permission from FINRA to change your name. Who granted them that authority? Like, the company, like that is literally tortious interference. So I think, with regards to scaling it back, I think we have to start, mounting complaints. Like, again, the squeaky wheel gets the oil, and there's definitely more of us than there are of them. I mean, that's Virus and Numeris, right?
Okay, I think that's good advice. I think this community has been very vocal, but it's most, there's a lot of social media vocalness, and then there's the other side of it, which is trying to get other authorities involved. And I would add the New York Attorney General's office. At least in the past, I've had reasonably good experiences with them in taking on financial services.
Exactly.
And there are a lot of thoughtful people there as well.
I would even say and we know we've talked about this before about, the fact that, electronic frontier, EFF could be maybe potential helpful in this. You've got the access to the Google Civic API. I think just a simple, let's just weaponize our attention, right? So let's just simply start, calling for an audit or calling for FINRA to liquidate, and return that money in their treasury to the U.S. Treasury. Like, the people in Washington, right, they will pay attention to their constituents, right? Like, even though Tom Emmer's from Minnesota and he's a big blockchain fan, he won't take my phone calls because I'm not in his district, right? So I have to go find a friend in the district and say, hey, would you send Tom this letter? Because he'll return fucking you, because you live in that district, right? So I do think, and even my own rep was awesome. Like, my rep, Betty McCollum, vote Betty. She was awesome at getting the SEC's attention, and the SEC was like, "Well, doesn't FINRA have a service level agreement?" I just laughed and laughed. I'm like, "Jeez, you'd think they would, right?"
Yeah. Let's last question, at least that I've got. Paul Atkins. Any thoughts on him? Any thoughts on what the next 4 years of this SEC might look like?
That's why I went back to the kinder, gentler kind of policy, right? Because wasn't he in during Shrub or W. Bush or whatever? I mean,
I think that's right.
So everything I've read, and I've sort of vaguely aware, because I wasn't really involved in the securities industry at that time, so I don't really have a much of opinion. From what I've read is that he's a pragmatist. He tends to be very thoughtful. He tends to kind of err on the side of de minimis when it comes to oversight. I thought, I did see that Hester Pierce says she's going to not renew, or she's going to vacate her position. I think later next year, whenever it expires. She's been a super advocate. I thought she may have been tapped for the position. Not that she'd take it. In fact, there was some question.
I thought so too. Yeah,
whether Atkins would take it either, to kind of unwind, the Gensler era. I think we're gonna, and this is, there's a lot going on, and this whole Department of Government Efficiency, the Doge meme office with Vivek and Elon, big, hairy, audacious goals, trying to shave trillions of dollars out. I've read some things that said if they, even get $100 million, kind of saved, it's still.
I'd be shocked, frankly. Like,
yeah, exactly. There's so much low hanging fruit, out there. So I don't know. It'll be interesting to see. I mean, there was a lot of high hopes for Gensler. People were pointing to the fact that he taught a blockchain class at Harvard, or whatever. He was a friend, or whatever. And he turned out to be just an absolute. I think it was Wormtongue from Lord of the Rings.
Wow. I mean, I think when you're coming from the crypto perspective, I think it's very reasonable to feel completely betrayed. I frankly, like, coming from the equity market structure perspective, again, he came in talking a big game. He identified a lot of the same problems in equity market structure of concentration and lack of competition that we've been talking about for a long time,
right?
And then proceeded to do nothing about it.
Yeah, well, even worse than that. I mean, it seems like, based on the evidence, he was an active participant in Operation Choke Point 2.0.
Right. So from a crypto perspective, I know he's seen even worse than what we would say from equity market structure, but certainly his approach was to regulate through enforcement. And I still think you can make the case that Congress abdicated its responsibility as much as the SEC did its. And, it's hard to know who has responsibility for defining digital assets in a proper regulatory framework, but there was a lot of fraud going on. Sure. And maybe that fraud should have been policed, and it really wasn't being. But the SEC's approach wasn't really to get at the important frauds, it seemed to be of a lot of superficial ones, and then going after things that are very questionable in terms of their definition of security, right?
Yeah, agreed. I mean, again, that's the thing that Mark Cuban said. There should be bright lines. Like, again, it's
Yes,
it's
yeah,
not
he's
like the
talked
thing
about
like
that for a long
pornography.
time. Yeah,
You know pornography when you see it, right? That's not the
right,
same true when it comes to securities.
no,
So I think for sure getting some bright lines and some clear definition. I think we've lost a competitive edge over the last 4 years versus the global market. Just seeing jurisdiction after jurisdiction saying these are tax exempt, right? If you do it to a transaction, if you hold it for whatever, and
right.
so I think I think we'll see if if we're actually if the U.S. gets a strategic reserve and starts acquiring some digital assets, right, to put on the balance sheet. I think that would be a good sign. I think it would be smart, as a hedge against inflation, which, by the way, they create on purpose to keep us on the treadmill, as it were. But
I'd certainly be happy from a Bitcoin perspective for that.
right,
Sure.
Right.
Yeah.
No, I think.
Yeah.
I think I'm going to say I'm cautiously optimistic about what we're going to see starting in 2025. I think the middle cannot hodl any longer, as it were. I think you've got these bloated organizations that have never downsized, even though the members they service are downsizing. It's just not tenable and credible. Like FINRA doesn't need 4,300 people to do the job to monitor 3,000 firms and whatever. And I think we need a credible competitor SRO to give them a run for our money. And then whatever happens with the dismantling, just grab a bucket of popcorn and sit by.
Do you think that I mean, one of the things Atkins has said is he does not believe that the SEC should be fining firms at the levels that they have been and in the way that they have been. Whereas I hear a lot of people that are very concerned that fines have really just become a cost of doing business. They're just passed on to the shareholders. Do we need more criminal enforcement when it comes to fraud? And is that the transition we should be looking to make?
That's a really good question. I think the credible threat that FINRA had was to basically bar you from life, denying you an income, right? Which, question whether that's legal or not.
Yeah.
I think for the overt things, fraud is still fraud, right? And fraud is fraud, and fraud can still be, can be criminally litigated for sure. I do agree that, the fines are a tax upon the people. Like even my fees I pay FINRA as a tax. I have to pass that cost through somehow. Right. So I don't think that fines are particularly effective. I think losing licenses to operate are much more effective.
Yeah, I mean that I completely agree with that, and I have expressed my frustration with FINRA many times. They came in one day and they're like, look, we just fined Robinhood. This is a record fine. And it's like, well, why are they still in business?
Right,
you're fining them because they're ripping off their own customers.
Yeah.
Why are they still in business? And they're like, well, it's really hard to take away a broker-dealer license.
Yeah, that's not true. Yeah, I mean, well, it is now. Thankfully, they claim that, but that's where they're kind of and they should make it. Again, it's just like at will work, right? I think if we were to look at say the OCC and how they dealt with like places, banks like Wells Fargo, right? They were under a consent decree. Like consent decrees are things where you have to demonstrate compliance and oversight. Like, it's a very effective rule because you want to get that thing lifted. Like if Robinhood had a boot on the Ferrari, right? They can't drive it off the lot, right? They might be, a little more motivated to get the lot, get the key off that lot, right? So
right. Yeah.
Again, that's what I'm saying is that fines are not effective. And they're certainly not effective sweeping into FINRA's coffers, for fuck's sake, right? The American Treasury, for Christ's sake. But I do think if there was some sort of version of a consent decree, even some sort of limitation said, look, okay, well, here's the deal, Robinhood. Guess what? You can only settle $1 million in transactions in a 24-hour period. Right? You think that'd be effective, maybe, at getting them to start being a little more compliant? Yeah, exactly. Right.
Yeah. There you go. Right.
Yeah.
All right.
I mean, that's fundamentally what a regulator is. A gas regulator regulates the pressure so that you don't get too much gas in the system.
There you go. All right, let's get regulators regulating. Let's get them some competition. Let's break them up and decentralize them. This is a fascinating conversation, David. Thanks for joining us. Yeah, we got a lot of people tuned in. We got some great questions. So thanks, everyone. Much appreciated. And if you want to learn more about what David is doing, he is the founder and CEO of Silicon Prairie Holdings, and Silicon Prairie Capital Partners is a FINRA-registered broker-dealer, but maybe, in a couple of years, not so much.
Well,
and definitely getting a call for a new exam tomorrow.
Yeah, exactly. If I go out, whatever, it's persistent. It's like it's never ending. But here's the deal: like, if I actually become like a top 50 firm and I'm funding them, then I'm fine to be a member, because evidently you get kind of carte blanche, right? You get
right. Yeah.
the executive
right.
washroom. So
yeah,
I'm super easy to find on LinkedIn. Hacker alias is the Little Duke. It's a play on my last name. Reach out. Happy to have a conversation, virtual coffee. We do open office hours via Zoom every Friday morning, 9:30. I'll put a link out to that on you can find it off my LinkedIn profile. Otherwise, Dave, really appreciate the opportunity. Thanks so much for inviting me and to share my advisors' thoughts. Love to come back and have a calibration call in 2020. Let's make a project of it.
Absolutely. I'd love that. All right. Thanks again for joining us and taking the time. Thanks everyone for tuning in, and we'll see you next week. All right.